Welcome to the Fear and Greed Business Interview. I'm Jennifer Duke. We talk a lot about greenwashing on this podcast, and recently it's become a major focus for regulators. So in the last year alone, the Australian Securities and Investments Commission has commenced action against Mercer, Vanguard and Active Super for allegedly providing misleading information over the ESG credentials of some investments. At the same time, a Senate inquiry is underway into greenwashing, and Treasury is doing consultation on a series of standardised, internationally aligned requirements for disclosing climate-related financial risks and opportunities. Clearly, there's a lot happening in this space, and businesses need to be ready. Persia Navidi is a partner at Hicksons Lawyers, specialising in climate and cyber risk. Persia, welcome to Fear and Greed.
Thank you. Thanks so much for having me.
So, Persia, starting with the basics here, what does greenwashing actually look like?
Yes, great starting question. So greenwashing, it's effectively when a company represents that it's taking certain steps, doing certain things regarding the climate or regarding sustainability, when in actual fact that's not happening, or it's not happening to the extent that was represented to the market. So it's really as simple as that. It's, for example, a company says that it's not investing in certain types of business or sectors such as oil and gas when potentially they are, and that's misleading the market when it comes to their green credentials.
I can imagine why that's concerning to investors who are out there. And I did mention some cases that ASIC is running at the moment. What are they alleging in the matter involving Vanguard in particular?
Yes, so there are three on foot at the moment. Vanguard was the second proceeding that was commenced by ASIC against a company for greenwashing this year, the first one being against Mercer. The Vanguard case is an interesting one because effectively it's being alleged that Vanguard made false and misleading statements and engaged in conduct that could potentially mislead the public when it represented that all of its securities in the Vanguard Ethically Conscious Global Aggregate Bond Index Fund, that's a bit of a mouthful, but when that fund was screened against certain ESG criteria. So they claimed that that index excluded issuers with business in a range of industries, like I just mentioned, including fossil fuels. But ASIC alleges that the ESG screen and the ESG research that was conducted wasn't completed for a big portion of issuers of bonds in the index and therefore the fund in total. So it was said that, a significant portion of investor funds were actually invested with fossil fuels and activities linked to oil and gas exploration. So it said that that was misleading of the market, and that's the basis for ASIC's proceedings against Vanguard.
And as you mentioned, that Mercer one was first off the rank. What was the issue with Mercer that ASIC raised?
So in that one, there was a sustainable plus investment option that Mercer operated, and Mercer represented that funds invested with that option weren't invested in companies involved in or deriving profit from the production or sale of alcohol, gambling, or the extraction or sale of carbon-intensive fossil fuels. It was said by ASIC that Mercer didn't ensure that all asset classes in the fund were excluded from investment in those sectors. And so as a result, it's alleged by ASIC that there were false and misleading representations made to the public. So again, it's a similar trend. We're seeing organizations, in particular, where people's money is being invested. So listed companies, obviously, it's important to investors to know where their funds are going, and if a certain product or a certain type of investment or a fund is being represented as, targeting those who are ethically conscious or want to be sustainable. And that's what is being communicated to investors at the time of investment. And then it turns out that actually that's not the case, and their money is going, elsewhere. That's where ASIC is stepping in and bringing proceedings against these companies.
So if ASIC is successful with their proceedings, what kind of penalties can we expect?
So at the moment, these cases are all still in the courts. In terms of the relief that's being sought, it's quite similar across the proceedings that have been commenced. So they're seeking sort of top declarations from the companies, pecuniary penalties, adverse publicity orders and injunctions as well against these organisations. So very much these cases attest cases as well. Like, we haven't seen these sorts of greenwashing cases in the past. Sure, we've seen cases of misleading and deceptive conduct. That's not new against organizations, but it will be interesting to see how these cases progress. And as I said, we've got the 3 on foot. So just ones to watch closely to see, what the extent of any penalties on these companies will be.
Stay with me, Persia. We'll be back in a minute. I'm speaking to Persia Navidi, partner at Hicksons Lawyers. And why do you think ASIC's taken such a big interest in this issue right now?
I think it's been on ASIC's radar for a while, greenwashing and, the potential for misleading the market and how to protect investors when it comes to what organizations are saying they're doing with their, green credentials. It's something that has been an enforcement action item for ASIC. It's certainly a current action item for them, but it's something that they've been indicating that they're looking at very closely for well over 12 months. They released their info sheet 271 in 2022, which set out, steps on how to avoid greenwashing. And that was before they commenced any proceedings, and that was before they issued any infringement notices as well. So there have been indications from ASIC that they are looking at this very closely. They want to ensure there's, integrity of the market is upheld. So it's not a secret that this is a target for them. And I think it's just an example of them, following through on what they've said that they're going to be targeting and taking action on. Another reason as well is this is not just limited to Australia. Organisations across the world are being targeted, whether it's by private litigants or regulators for greenwashing. Australia is up there though. We've got in terms of actual litigated cases, we're second only to the US. So it's not a new thing here in Australia, climate-related litigation, and it's something that is quite prevalent.
So another part of this is that Treasury consultation that I mentioned earlier around disclosures for climate-related financial risk. And part of the goal here is clearly to bring Australia into line with some global standards. Can you explain what's happening kind of elsewhere in the world and why this matters to businesses and to investors?
Yes, absolutely. So we've had this year the long-awaited International Sustainability Standards Board release its comprehensive global baseline of sustainability disclosures. So this has been a long time coming. It's come out of COP27, which was the Conference of Parties back in, it was 2021, if I'm remembering correctly. So this body was established effectively to develop that global baseline for sustainability disclosures. And earlier this year, in June of this year, they released 2 disclosure standards. So one on disclosure of sustainability-related financial information and another one on climate-related disclosures. So very briefly, the standards, they aim to require companies to disclose information about their sustainability-related and climate-related risks and opportunities that's going to be useful for investors, shareholders, and others who rely on their financial reports when they're making investment decisions. So quite a big deal. The reason being that at the moment, looking at Australia, there's no one standard for companies to refer to or rely on when they're reporting on their climate-related financial risks or making certain disclosures. There's the TCFD, which is the Task Force for Climate-Related Financial Disclosures. That provides a guideline, but you can't say that that is the only method of reporting that you should be referring to. There's no one set standard. So the fact that this has now come out globally is good news. It's great news for companies. The impact it has on Australia is yet to be seen, but you mentioned that consultation paper. So Treasury released, it was December of 2022 that they released their first consultation paper, and the second one was released shortly after these global standards were released. And that one, it sets out the intention of Australia introducing some sort of mandatory reporting framework, at least for largest listed companies and unlisted companies and financial institutions by 1 July of 2024. So that's the intention there. That's what's been communicated. So companies need to be, looking very closely at how they're reporting, need to be across what's in that consultation paper as well. And it includes proposals such as, companies need to disclose information about any climate-related targets if they have them and their progress towards these targets. They need to disclose their material Scope 3 emissions from the second reporting year onwards. So again, that's one that organisations have struggled with a little bit, Scope 3, because it's more difficult to capture that information. But again, the fact that it suggests in the proposal that will only need to be reported on after the second reporting year indicates there's going to be a period of grace as well. It's not going to be something that, straight away organisations are going to need to report on that. There's always a bit of a grace period with any new legislation.
I think everyone will be thankful for that grace period, but clearly there is an awful lot of regulation and scrutiny on the way. Just finally, any tips for companies to prepare now when there's so much to get ready for when the rules change?
Yes, I think if you haven't started already, you should be starting now in terms of having some sort of framework for disclosing climate-related financial risks. Regulation or laws on this are coming. Australia is in some ways behind because it has been introduced over in the UK. It's been introduced in New Zealand. In the US, there's a proposal that's been with the SEC for a little while now. So we're catching up, which is a really good thing. And organisations just need to be across what it is that their obligations are likely to be. What does that consultation paper say? These are the types of things that we see in the work that we do in terms of preparing. Preparation is key. Being over-prepared is not going to be an issue.
Yep.
So just being across what the obligations are, being across what regulators are doing as well. And I think it's really important for directors in particular to be mindful of this, and also their insurers. So directors and officers insurers, also this is something that, it's long tail. Companies are making net zero statements now about the future. And if that doesn't eventuate, or if it comes out that ultimately that wasn't correct or it was potentially misleading, that's when the claims will start to roll in. And the final point I think that's important to get across is that the consultation paper, which includes proposals for what these laws will look like, it actually includes a civil penalty regime as well. So that's going to be important from a liability and litigation standpoint. Directors need to be mindful that that's also going to be included. So I think the key message is, at the moment, there's no one guideline, but these laws are looking to be introduced, which is good news, hopefully welcome news, because there'll be, one standard that companies can look to when it comes to reporting, and just start preparing now.
I think there's a lot there for businesses to take away from those suggestions. Persia, thank you so much for talking to Fear and Greed.
Absolute pleasure. Thank you very much for having me.
That was Persia Navidi, partner at Hicksons Lawyers. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Jennifer Duke, economics correspondent at Capital Brief, and filling in for Sean Elmer. Have a great day.